So both are very important drivers, and which is why now accelerating both of them in the UAE also ensures that there is significant ratio of advisory, but the AUM continues to grow across markets.
So you know what my next question is going to be then. What is the current AUM and what targets have you set for your AUM in perhaps the next 3-5 years? What do you think is going to drive the growth there?
Mubina, it's a very interesting question. It's also a very scary situation because the speed at which the economies in which we are growing and the space is growing. Today, India is targeting $1 trillion asset class within urban infrastructure and real estate by 2030. UAE is targeting $2 trillion. So in the next 4 to 5 years, we're looking at a $3 trillion potential. Combined today, they're roughly at about $1.2 trillion. So from $1.2 trillion going to $3 trillion is a very large growth potential for all of us. How much can we do again is a function of our capability, our speed, and our focus. Having said that, of course, one doesn't want to do too much too soon. Otherwise, we risk breaking the model very quickly. Where we are today is at 1,900 crores as of the first half of this financial year, potentially accelerating to 4,000 crores in the end of this year, to doubling that over the next 12 to 18 months. And that again, I think may be conservative in some way because, as I said, the opportunity is absolutely stunning. I have seen pairs who've grown from 2,000 crores to 60,000 crores in a span of 7 years. And this is only India. We could do similar numbers, or we could do more, or maybe even slightly less. But that is with the scale at which one is able to grow. Because the interesting part is that pre-2020, after the spate of all of these surgical strikes and regulation, demonetization, etc., the market started to consolidate, shrink, and favor the stronger enterprises. Post-COVID, the reality has even been grimmer, where the weak players effectively went out of business. And it's only the large branded corporate governed enterprises which are in play, which means 52 investment companies have shrunk to less than 15. Now, we are part of that few who are now slated for growth irrespective because we withstood time. We withstood our performance. We've stood the test of what it means to actually deploy capital at scale in a clear, transparent, integrated and committed manner. So given those check boxes which are today mandatory for domestic or global institutional capital, I think we're today slated for a very high growth. And again, it's multi-product. Most investors, fund managers, investment houses, NBFCs typically focus on one strategy or two strategies. Today we have multi-pronged approach, which is a solution capital. So when we see a very large growth in industrial warehousing, data centers, plotting, low-rise developments, one is actually targeting that in a very specific way. When one saw a slew of NPAs, a slew of IBC matters, a slew of issues with NPAs and projects stuck with banks or asset reconstruction companies, we started targeting that and rescued a bunch of that. So given the solution-oriented capital, which is really what the country needs, one is able to actually grow 10 times without a problem. So clearly, I think it's up to us to see when can we reach from the first 10,000 crores to the next 20,000 crores. And I think it's within this decade.
Okay, awesome. You had your IPO and you're, I think, one of the first, correct me if I'm wrong, but I think you're one of the first listed businesses who is so specifically focused on real estate solutions.
Yes.
Or the only ones. Yes, there are other listed players, but then they have several verticals.
Right.
But yours has a more focused approach in this particular sector. Do you think that is also in a way a competitive edge when it comes to attracting investors? Because obviously being listed, it lends you a certain credibility. And in the same tone, I'd like to understand from you, what is your competitive edge there?
Yes, while listing does add credibility, but again, it was more to understand what is it required to be the best in our country. And for that, you'll have to look at global templates, right? Because clearly, we're going in a certain direction when we look at globalization. We're looking at the best of breed solutions and platforms from global landscapes. So when I saw that a lot of my peers, a lot of the other players in the country that came in, whether it was Brookfield or Blackstone or KKR, were all listed in their countries. I said, why are we not like that? When you have global players who can come to India and make a large impact, why can't domestic managers do the same? And for that, you need to first build credibility, because that's what we've never built. Fund managers never build credibility for themselves. Everybody felt they were only here to earn their 220 and not worry about capital. I said, I will put my money first. And my 100% money went into actually our funds. And I have no other investments except for what we do. Zero. So I said, first let me put everything in. That means I'm committing myself to this particular product and this platform. That is the first starting point. And then listing determines the ability to actually play at scale in a very transparent look-through manner. Because everybody felt it's a black box. You will take my money. After 1 year, I'll get some report or NAV report. And then I'm lost as to when I'm going to get my money back and when I'll actually make real returns. It's all paper returns, right? And I don't know whether it's genuine. I said, that can't work. You have to be able to show exits. You have to be able to show real bankable in the money returns. You have to be able to show how you're actually moving your strategy from visioning to execution. And I think that's really where the listing works, because it also gives you full look through into what am I actually doing? What are my earnings? Where is it coming from? Am I actually shafting the investors, or am I actually doing them good? How much of my own money is in play? Am I just saying it, or am I actually doing it? So when everything is available for examination and scrutiny, there's nothing left to hide. And that is the only way when you can start becoming global, looking global, following what the global majors have done, which is why they're global, which is why they're at this scale, because they are willing to put everything down and say, this is who we are and come play with us. So it was definitely a very big step to make that happen. Credibility, yes. So Mubina, India has so far been dominated by banking players who are allowed to do everything, from banking to private equity to alternatives to mutual fund and what have you. And the US realized that many years ago, post the 2001 crisis, that there has to be a separation, and Glass-Steagall Act happened. And that's when all of these major alternative managers, whether it's a KKR, Brookfield, Blackstone, etc., started to become very big. That is bound to have happened in India as well. There has to be a separation in conflict of interest. You cannot have your depositors getting sold a risky product because you're a banking client. So there has to be separation of conflict of interest, and which was not happening. So realize that what is now being seen in the private equity space, where you have large players who are not necessarily banking players, because the good part was that the banking guys never really understood private equity, because they were lenders by profession. They understood credit, they understood real estate, they've lent this to them. But they never understood private equity. So at least private equity started to form independent platforms. But nobody became large enough to become a soft bank. So I said, we can become a soft bank also from here. When it comes to private equity, we can become a Brookfield, Blackstone, KKR, or anybody also from India. So therefore also when you do that and when you list it, you are able to say that I'm willing to compete on the same terms, on the same lines, with the same disclosures, and be an independent manager without having any conflict with anybody else. So that credibility building was very important, because then you get discovered. Because then you have global audiences looking at you, then you have global investors looking at you, you have global private equity funds looking at you and saying, oh, okay, now I understand what you are saying. Otherwise, you're a mouse squeaking from the corner, but now you have come at a stage and now we can hear you better, we can see you better. So that visibility was very important. Credibility was built on track record, but the visibility became much larger. And that was now very important, because now we become a bigger magnet for global and domestic capital.
I want to talk about your framework for when you conduct a private credit transaction, because at the end of the day, that's what your business is built on, right? You have to identify the ones that are going to be tomorrow's stars and help your fund perform. So if you could share a little bit of a glimpse into how that thinking works, and how do you decide whether an asset is worth your time and money or not? If you could share a little bit about that.
See, underwriting is a science and an art. There cannot be any formulaic or any sort of an algorithm which can tell you, unlike in standard credit underwriting, well, algos can take your credit history, your asset value, or your bank account statement and discipline, give you a credit score. This goes beyond that, because you're actually investing or lending to someone who's trying to deliver a certain outcome. In doing that, obviously, first the counterparty's track record is very important. How solvent or how credible they are. And which means on the ground grassroots intelligence, getting to know what is not published or available. So that is the most important force. The second becomes our ability to actually sensitively manage every variable in the play. So when you look at any project and you say, how is the risk management going to work? What is it that we are able to control? How do I ensure 100% that we will exit at a particular date with these returns, irrespective of economic, geographic, or any other environment or regulatory environment. So when you have those frameworks of risk management in place, which is doing very, very high level stress testing on the counterparty, on the asset class, on the opportunity, and on various other aspects which goes to into delivering a project, then we know that when it comes out of a stress testing framework, it stood that for 2 3 months, then it has a very high chance of actually succeeding. So that's the first part, which is the credit underwriting. The second part is then making it happen. Today we are the largest team in the country, managing less than $500 million. Today we have a team of 60 people. Now 60 people typically worldwide would be managing 600 billion, or 60 billion to say the least. So when you have that kind of bandwidth, 800 man years of people sitting behind every investment you make and ensuring 24/7 that boss, you have to deliver this. You have to sell this much. You have to collect this much. You have to ensure this money comes into the RERA escrow account. You have to ensure that this completion date happens by this date and time. So when you have a very large talent pool which is looking at legal, regulatory, technical, marketing, finance, credit, all of that on a 24/7 basis for each of your investments, then you're effectively driving your own outcomes. You're not leaving it to market and chance. So that is the second and most important part, is actually hands-on engagement with our investments.